All right, let's get right into it. Today, we're going to break down a really cool and powerful trading strategy. This one comes straight from the folks over at babypips.com. The whole idea here is to take two classic trading tools, mash them together, and get one super clear signal out of it. So what do you even get when you combine two tools that, most traders already use? Well, Baby Pips calls it a simple but super awesome trading strategy. And honestly, when I hear that, I'm like, okay, I gotta see this. So let's dig in and figure out what all the fuss is about. Okay, so first things first, let's talk about this powerful combination. It's all about how two classic tools can become one single powerful signal. All right, so think about it like this. On one side, you've got your Fibonacci retracement tool. Its job is basically to find these kind of hidden levels on the chart where the price might turn around, support and resistance. Then on the other side, you have Japanese candlesticks. These things are awesome. They tell you the story of what's happening right now, the real-time fight between the bulls and the bears. Now, both of these tools are great by themselves, for sure, but the real magic, that happens when they work together. And when they do align, they get this really catchy name for it, Fibsticks. Yep, you heard that right. It's short for Fibonacci candlesticks, and that's the whole shebang we're going to unpack today. Okay, theory is great, but how does this actually look on a real chart? Let's get practical. We're going to jump into a case study using the euro versus the US dollar on the 1 hour chart. So the very first thing you need for this strategy to even work is a nice, clear trend. Just look at the chart here. You can see it, right? That classic waterfall, just a series of lower highs and lower lows. That's our starting block. We need that downtrend. Okay, we've got our trend. Now we pull out the Fibonacci tool. And what we do is pretty simple. We click at the very top of that big move, that's the swing high at 1.3364, and we drag it all the way down to the very bottom, the swing low, at 1.2523. And boom, just like that, the chart shows us all the key levels where we might see some resistance. All right, so after a big drop like that, the market almost always needs to catch its breath, right? It starts to pull back, climbing up a bit, and this is where every trend trader starts asking that same million-dollar question. Where is the perfect spot to jump back in and short this thing? And that question brings us to the best part of this whole strategy. This is where we look for that one single decisive signal, that aha moment on the chart that basically screams, hey, the pullback is done, pay attention now. And there it is. Would you look at that? Look really closely at where that little rally just stopped. It hit a wall right on the 61.8% Fibonacci level. But it gets even better. Look at the type of candle that formed there. That's a long-legged doji. I mean, that is the textbook definition of indecision. It's like the buyers just ran out of gas. And trust me, that is not a coincidence. That right there, that is our signal. So that perfect little candlestick sitting right on that fib level, that's what Baby Pips calls a fib stick. It's really just a reversal candle showing up at a super important Fibonacci level. It's basically a big flashing sign that the original downtrend is probably about to take over again. So you might be asking, why is this such a big deal? Well, let's unpack it. First, that doji candle tells us the buyers are completely exhausted. Second, it's happening at the 61.8% fib level. Now, you have to understand, that is probably one of the most watched technical levels on the planet. I mean, you can bet that thousands of other traders and their trading bots were all watching that exact same spot, probably with sell orders ready to go. So when you put those two things together, the tired buyers and that giant wall of sellers, you get some seriously strong confirmation. Okay, so the signal looked amazing, but did it actually work? Let's see what happened next. Wow. I mean, this is just a perfect example of why you wait for confirmation. Look at what happened. The second that doji candle closed, it was like a trap door just opened up beneath the price. The sellers just swarmed in and took over. And the price didn't just fall. It absolutely cratered, all the way back down to where it started. So just how big was that drop? It was a 500 pip move. 500 pips. Now, for anyone who's not deep in the Forex world, a pip is the smallest little tick the price can make. So catching 500 of them in one go, that is absolutely huge. Seriously, a trade like that can make your entire month, heck, maybe even your entire year. And all of this really boils down to one key idea. It's not just about Fibonacci or candlesticks, it's about the incredible power of waiting for confirmation.
So let's put this all together into a simple 5-step game plan. Step 1, find a good, clean trend. Step 2, draw your fib levels on it. Step 3, and this one's tough, be patient. Wait for the price to pull back to one of those key levels. Step 4, now you're watching like a hawk for that fib stick, that confirming candlestick pattern. And finally, step 5, the most crucial one, don't jump the gun. Only think about getting into the trade after that confirmation candle is fully closed and complete.
And Baby Pips puts it perfectly. They say this is where you use your knowledge of candlesticks to give you more confirmation. See, it's a huge mental shift. You stop guessing where the price might turn, and instead you wait patiently for the market to actually show you where it's turning. Big difference. So there you have it. We've seen how you can take two pretty common tools and combine them to create a really clear, high-probability signal. It's based on solid logic, market structure, and psychology, and, well, the results kind of speak for themselves, don't they? So the real question is, now that you know what a fib stick is and how to spot one, what are you going to do with it?